Well, we spoke earlier about the different groups, the American groups coming across and buying into existing development companies. So I think one of the comments mentioned was that there's maybe a shift towards development, and then if you're going to do that, you want to know who your development partner is. So they're actually buying into the group, and so they know who their development partner is because it's part of the group. And one recent one in Poland was Echo Investment, which has a pipeline of existing buildings as well as potential developments. The other one was GTC, which has more of a CE base of developments across a number of different markets. So that's one thing that was interesting to see. With respect to Poland, I guess I'm sure a few of the panelists know about this already, but it depends on which market. So the country is similar to the UK and to Paris, and the majority of, let's say, the office stock is in the capital city, Warsaw. And so Warsaw there is a lot of development. There's pressure on the rents. Vacancies seem to be creeping up, but there's still a lot of developments going on. So there's a concern that there may be a bit of oversupply. But some of the other smaller markets, it's a much different dynamic.
Presently, we would monitor Warsaw. I mean, we have bought a lot in Warsaw in the past years, but we also have the same view that it's oversupplied at the moment, with a big pressure on rents, and it's more a tenant shift than a tenant growth happening. So you're vacating one into the other, and you're not going to reduce that vacancy for a while moving forward. We did, however, markets that I very much like are Wrocław and Krakow, which we think is our great value and just dynamic, good growth cities with great universities, just a very good human capital there, and those are the cities that we'll be looking at both for Poland, which we think has a long-term very good prospect of growth and a very good prospect in Europe, and will be one of those driving markets. So we have a strong belief in Poland, and we also have that for Prague, but again, there's a tendency for oversupply there again as well. And so that makes it difficult to find that asset, a new shiny asset leased, that is competitive enough on its own to compete against that vacancy, and that's going to be the challenge there. Retail is a nicer story, of course, but those are the cities that you need to look at. And the same, of course, goes for the Nordics, where, again, hedge costs make a big difference. So it's Finland, and Finland is a challenge. So Europe, for us, is a relatively small place, and as I already mentioned, relatively crowded. So it's small, crowded, and you really have to dig deep to find the opportunities that have a long-term perspective in a market I think we should all believe in will be equity rich for quite a while, because just the amounts and the source of capital, which we haven't touched on today, is a long-term capital, and it's equity driven, and equity is more patient than debt. So even if movement does come along, it'll be a smoother one, and it's going to be one that, at least I think in our generation, will have plenty to do moving forward.